Folks, you better buckle up because this trade war is heating up fast. Trillions of dollars continue to evaporate from markets, and sadly, the few dip buyers left are driving these little fake-out rallies that end up serving as pure exit liquidity for panicked whales. These are some of the most volatile times I've seen throughout my career, and you're seeing so many stocks erase just years and years of gains. And with China tariffs about to hit 104% and all other reciprocal tariffs slated to be enacted at midnight, well, if you're somebody who is a stock market investor, participant, conscientious observer, well, you need to watch this video while you still can. Now, this may all look very terrifying to you, but let me tell you something essential, something that's going to keep you in check here. Amidst all this fear and uncertainty is going to be one of the most unprecedented financial opportunities of your lifetime and of my lifetime. Yes, I know people always say that. It's basically a cliche at this point. But remember, folks, fortunes are never made buying at market peaks. They're made when everyone else is selling. And the bigger the crash, the better the deal that you're going to get and the more upside you have. It's just simple math. The less you pay for something, well, the more you're going to make when that goes back up to its all-time highs. In today's video, we're going to break down, number one, the market data we are seeing from hedge funds, big money players. What is going on? Number two, we're going to break down the tariff negotiations. What is going to happen once some of these major deals are made? And number three, the main entree, we're going to break down 5 stocks that you seriously need to consider buying the dip on. These are stocks that are being discounted based solely on fear, not on valuation. Some don't even have any exposure to tariffs at all, yet they're down like 50 to 70%. Completely ridiculous. If we get a major recession, it still doesn't make sense that these stocks are down so much. We're going to break all of this down for you, and as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. And today's video is brought to you by our absolutely free email newsletter. In this crazy market environment, you need to have our most recent real-time report sent to your email. First link down below. You can also text the phone number to sign up for our SMS alerts. So we've been together for many crashes, and every single time it's the same story. Oh my goodness, you just don't understand this 2018 trade war. It will never end. This virus will never end. These rate hikes will never end. This inflation will never end. This dip will just be forever and ever and ever. You cannot buy the dip. And then you have folks that come in from previous crashes. I don't know if you were around trading in these crashes, but people will say, oh, the '08 crisis. Oh, stock market got hammered. Oh, the .com crisis, the bubble. Oh, tech stocks got hammered. Black Monday 1987. Oh, but they completely missed the other half of the story here. And sure, many of these periods sucked if you bought in at the top, but guess what? If you bought good assets, even at the top of these previous crises, well, almost in every case, a few years later, they are at all-time highs and continue to grow. But more importantly, where the unprecedented opportunities to generate wealth were in the dips themselves. Not timing the dips perfectly, not having a little crystal ball, but buying dips in good stocks at good prices. That has been a tried and true way for 100 years to make tons and tons of money on your dough. So again, as this crisis continues, let everybody else panic. Let them lose tons of money. Let them that bought in at the top sell out at 50% down. Folks, when you see good stock after good stock trading 50, 60, 70% down from their highs reached just a couple months ago, companies that are now all of a sudden trading around their COVID lows, companies that in many cases have no tariff exposure, well, when you see company after company like this, you know something's up and you know that we're in an unprecedented opportunity for those who play this correctly. But Charlie, this time is different. We have evil tariff man going and tariffing everybody. We've never seen something like this before. Every single major stock market crash is caused by something we've never seen before. That's what gets people to sell. But you got to look at the long-term picture here. Now, we need to go into this crisis specifically so that you understand the bigger picture here. So markets have long been aware that Trump wanted to do tariffs. He was very vocal about this for decades. He promised it on the campaign trail, and we talked about this here on the channel long before this crisis had started. But the way that the tariff war has been rolled out was way more aggressive than anyone expected, attacking virtually every trading partner with extremely high tariffs, many based on nonsensical calculations on deficits, not fees as they claim. And many of these so-called reciprocal tariffs are so bad that they are basically saying that the US is closed off to the international business community. They're saying we're closed for business. And because of this, many countries are scrambling to negotiate. And who knows what happens? Perhaps these draconian tariffs do end up resulting in a significantly better deal being made over time with many different countries. But these deals will take a long time to sort out. And until then, you have companies pausing shipments, companies pulling forward guidance, companies not knowing what the hell to do with their supply chain. And all of these things are a disaster. It's plain and simple. You're going to see jobs lost. You're going to see prices go up, and the financial health of your average American will deteriorate, at least in the short to medium term, and not just your average American, but especially folks that trade with us, our biggest fish trading partners. And that's why you have seen markets lose trillions upon trillions of dollars, with many not super excited to buy back in. Investors right now are genuinely panicked. Hedge funds are receiving margin calls left and right, and fear indicators like the VIX have skyrocketed to rare, historically critical levels. And you got to remember, folks, when market upswings happen, funds go and they take out margin. They take out loans to be able to put more money into stocks and accelerate their gains, which causes a self-fulfilling prophecy to the upside. But when you're in a downtrend, well, the opposite happens. All of a sudden, guess what? Folks are getting margin called, and so they accelerate the downslide and everything because they have to sell out massively. And many don't want to sell out. They're like, hey, the valuation on the stock is great. I want to be inside. But the bank's like, hey, you're getting margin called. There's nothing you can do. They're like, okay, well, I guess I'm going to have to sell out a 70% down stock that I wanted to be in for the long term. And when you see that happen, you're getting all these valuation mismatches throughout the market. And honestly, I think if tariffs don't start getting negotiated fast, this is going to get way, way worse, because a lot of people that have healthy margin or they aren't trading on margin are refusing to sell right now because they think that, guess what, Trump is just going to go ahead and negotiate all these tariffs away. But if he actually stays true with a lot of these tariffs and you don't get that massive negotiation, expect a lot more rug pulling. The shutting off of the US from international trade is quite frankly an economic Armageddon for the entire global economy. You have to consider that a lot of supply chain components are just not available here in the US, and it's going to take a very, very long time for the US to catch up. And a lot of factories that need to be built here, well, the companies that own those factories are going to be thinking, well, why would I spend billions of dollars investing in factories in the US when the next president could just then go and switch off the tariffs? If these tariffs were done by Congress, it would be much more difficult to do that. But this president did it with executive action using emergency powers, which means if you get a different president next time, well, he or she can just switch it off. So that means billions of dollars down the tubes. So a lot of companies are just going to pause shipments or employ a wait and see approach. Okay, let's talk about negotiations. So here's the key. Trump is playing a game of chicken here. This is a president who has spent the last few years fighting people trying to take all his money, jail him, and even shoot at him. So he does not care about the pressure he has right now. He could take the entire global economy, and if he's doing what he thinks is the right strategy, well, he's not going to bow down to the pressure no matter how many people call him up and complain. He has his viewpoints, and he's had these viewpoints for many, many decades. He sees this tariff war as a win-win. Either countries come to the table and negotiate with way better trade deals for the US, or they don't, and we get more manufacturing done here. And personally, look, I don't know how you feel about this, but personally, I just wish they had used some real numbers for these tariffs and a more strategic, pointed approach. But he is showing the world by doing it this way and so aggressively that he's not bluffing, and he is willing to tank everybody in order to get what he wants. And so far, this strategy of aggressive tariff threats have crashed markets, but it has so far forced some rapid concessions from key trading partners. And here's the silver lining with that. You see, even minor breakthroughs in these negotiations can trigger explosive market recoveries. For instance, a mere fake rumor that came out yesterday that Trump was considering a 90-day pause on these tariffs sent the Dow Jones soaring some 2,000 points within minutes. Imagine the rally we'd see with an actual breakthrough, right? A very, very big one. Look, it's very, very nice to think stocks should just go slowly up and you make money, but in reality, stocks go like this, up and down, up and down. And with Trump and these policies, you're getting a lot more of that up and down and a lot more volatility, but in that volatility comes opportunity. So keep that in mind. This volatile situation and this fear and euphoria that keeps coming back and forth is huge opportunity for folks that are buying the fear. A lot of stocks are out there crashing because yes, recession fears, yes, tariff worries, and yes, uncertainty, but they're also crashing because of margin unwinding. And all of a sudden, when certainty comes back into the market, when negotiations are made, or at least we have some sort of set line of where tariffs are going to be, well, at that point, whenever it is, so that leads us to the next point. Where is the opportunity? Well, for traders, you need to know these stocks. And we've said this every single time the last maybe 5-6 years when there's a big crisis. We say, look at SQQQ for trading downslides in the NASDAQ, UVXY for trading the VIX, TQQQ for trading upsides in the NASDAQ. On days where you do have those beautiful green buy the dip spikes, well, those are opportunities to trade. But you also got to be careful if you start seeing some downward sentiment volume. Well, that means you got to take some profits. Because again, until we get a full-on recovery, you're not going to be seeing TQQQ continue to trend up. Now, what about buy the dip opportunities where you buy good assets at good prices as I talk about? Well, here are 5 different stocks you need to know. Number 1, Palantir. So Palantir is uniquely built for turbulent times. While many many companies struggle amid geopolitical uncertainty, Palantir, the tier that Palin thrives, providing essential data analytics to governments and global corporations navigating complexity. The company's software isn't just a luxury, it's a necessity, helping institutions optimize operations, predict outcomes, and strategize amidst chaos. Right now, we're going into a chaotic world. Well, Palantir, great for chaos. Palantir's growth is underpinned by major government contracts and increasing commercial adoption, which continue to expand even during downturns. Number 2, AMD, Advanced Micro Devices. Look, AMD is such a good deal right now, it's ridiculous. AMD is a foundational player in semiconductor technology and has faced significant declines due to tariff tensions and broader market turmoil. However, the fundamental demand for semiconductors isn't disappearing. It's increasing exponentially, driven by advancements in AI, cloud computing, and gaming. AMD continues to innovate. It continues to be one of the top players, and with its recently rolled out next-gen chips, I think it's poised to reclaim and expand market share from competitors. Its strategic partnerships and leadership in high-performance computing position it strongly for a rapid recovery post-tariffs. Number 3, Novo Nordisk. Pharmaceutical giant Novo Nordisk has seen its valuation nearly halved due to external market pressures completely unrelated to its robust fundamentals. The company's deep pipeline, leadership in diabetes treatments, and groundbreaking advancements in obesity treatment, a very hot market, remain powerful growth engines. Lots of people out there, people are getting more and more sick. Global healthcare plays that are discounted and down and have a long track record of success, those are going to be good dip buys. Number 4, Amazon. So Amazon's current valuation presents a rare opportunity. Hammered by global trade fears and supply chain disruptions, Amazon shares are trading substantially below their historical averages. Yet Amazon remains fundamentally sound with strong revenue streams from AWS cloud computing, continued dominance in e-commerce, and expanding advertising revenues. Here's the thing with Amazon. Look, it's very, very well positioned to be able to weather any kind of storm. And so if you could buy the dip on this, no matter how bad things get, I have a hard time believing you're not going to see a lot of upside. Number 5, NVIDIA. NVIDIA is the killer in this AI race. And if you want top-notch high-performance chips with excellent execution, and you want to buy the dip on the biggest AI name of the last couple of years, well, this is the play for you. The explosion of AI and data centers and high-performance computing is not going away, so this is one that you got to be putting on your radar. Anyways, folks, bigger picture, bigger message here is that fortunes aren't made buying at market peaks. They're made buying when everyone else is selling, so just consider that. Remember, eventually, this uncertainty will be behind us, and we will have moved on. Who knows how long that's going to be? I can't tell you. Nobody can tell you. But at the end of the day, this will be behind us. And for better or worse, you're going to wish that, hey, I had bought good assets at good prices. Anyways, folks, that caps off today's video. Have a great rest of your day, and we'll see you in the next one.